Fit. All right, so we are going to today be able to determine the amount withheld for federal income tax. So if you've ever noticed on your paycheck, deductions, which are on usually the right side of your paycheck, and then, you've got your final pay at the bottom. One of those is for federal income tax. And it's one of the larger ones. Federal income tax and state income tax are usually the largest two values that get deducted from your paycheck. So if you have ever received a paycheck, what was the amount you expected? So you can think about that. Some people might just expect that their pay times the number of hours is what they get paid, but you all know that's not how it works. There are deductions in taxes. Jack Myers was surprised to see that his employer deducted approximately 19% from his gross income. You know what? I'm glad this guy spells his last name correctly. So I can relate. So this happened in on July 20th of 2000 and something, before 2024. And we've got Dave's Drilling and Equipment. That's who he works for. Looks like he lives in Kentville, Michigan. You go, Elijah. Kentville, Michigan. He got paid $510.43. So, his gross pay, this is 19% less than what his gross pay was. The memo, that's how much he gets paid per week. And then looks like Dave Davey is his boss. A little redundant name. Okay. So oftentimes you'll have your paycheck, and then your pay stub, which is attached to that, has all the things that are, unless you have direct deposit. If you have direct deposit, your pay stub should get emailed to you. Does anybody use direct deposit? Anybody in their jobs right now? Anybody get direct deposit, like just automatically? Yeah. Okay. Ella, do you get emails with your pay stub where it breaks down all the stuff? Cool. All right. If that's not the case, you should definitely get that. Your company is required to provide you a pay stub to let you know where all those deductions are going. Anybody here get paper paychecks when they get paid? Paper? Okay. And then your pay stub is attached to the check, right? And you have to separate them and then take the check. And yeah. So federal income tax. Here we go. Federal taxes provide money. Here we go. This tells you where the money goes. They provide money for federal government agencies and services. The law requires employers to withhold a certain amount of your pay for federal income tax. FIT. The IRS provides employers with tables that show how much money to withhold. The amount withheld depends on your income, marital status, and withholding allowances. Withholding allowances is highlighted here. This is a definition. We'll talk about that. Allowances here. You may claim one allowance for yourself if you are married, one allowance for your spouse. You may claim additional allowances for any others you support. What that means is, if there are people in your household that depend on your income, you can claim them as allowances, which basically means you have less taken out of your paycheck. And the reason for that is, if people in your household are depending on your money, then you should be able to keep more of it to help those folks that live with you. And there's exceptions for that kind of stuff. So that's what that's all about. So let's take a look at example one. Carla Good is an actuary. Her gross pay for this week is $425.88. So that's right. That's how much she makes before taxes. She is married and claims two allowances, one for herself, two allowances, one for herself, one for her husband. She depends on her income. Her husband depends on her income. What amount will Carla's employer withhold from her pay for federal income tax? So first thing I want you to know, every problem and every table that we have is from 2010. There are changes to the tax code almost every year. So these numbers here are not current for 2024 or 2023. And the reason why is because the book was written in 2010. The answers provided in the book need to stay accurate with what's in the book. So we're going to use tables from 2010. Although the way that it's calculated today hasn't changed. It's just the numbers are different. So the way, the charts and all that, same thing today as it was 14 years ago. It's just new updated numbers, and the numbers tend to be larger because as time goes on, things cost more money, so more gets taken out. That's how it works. So use the married person's weekly payroll table on pages A4 through A5. So if you look at this piece of paper, you will notice this first one is page A2. The second one is page A3. A2 and A3, what's the title at the top on A2 and A3? Weekly payroll period for what kind of a person? Single, okay. So, listen up, I want you to know how to use this. So, A2 and A3 are for single people. So A2 is here, A3 is here. And it's just the amount of money that people make per week goes up. Now, once you get to page A4, we're talking about people who are married. So married persons for A4, and then on A5 as well. Also, A5, also for married people. If you look at the columns, column number 1 is people earning at least a certain amount of money, but less than another amount of money. And this is for a week. So let's say, for example, you make $148 in a week. That would be this line right here. You're making at least $145, but you're making less than $150 if you make $148 a week. So it says that Carla makes $425.88 that week. So $425.88. So if you go down, here's $420. Here's $430. $430 is too much. So this is the line that we're looking at. She's making between $420 and $430 that week. Now, these numbers are very close together, and if you try to go over on this table, it can be a little bit challenging, so that's why I'm using a sticky note to like draw a line across the bottom of it, so I don't mess this up. Now, if you look at the top of the page, go back to the top. The other columns have to do with the number of allowances that are being claimed. If you don't claim any allowances, then this is how much money gets taken out of your paycheck for federal income tax. If you claim one allowance, like for yourself, the next numbers, that's how much money is taken out of your weekly paycheck for federal income tax. If you claim 2 allowances, like Carla, she's claiming 2 allowances, one for herself and one for her husband, that's the number that is going to be deducted from her weekly pay for federal income tax. So she makes between $420 and $430 a week. And we're going to claiming 2 allowances. So 0 allowances is this first one. 1 allowance is the second one. 2 allowances is the third one. So this is the amount of money that gets deducted from her paycheck per week for federal income tax. $14. That's the answer. So you just line it up with the income and how many allowances. Yeah. Yeah. An allowance is basically like a dependent. So your parents will claim you as a dependent. So when you fill out your when you first sign up for work, W-2 or W-4, one of those. When you sign up for, when you get a job, it'll say, how many dependents do you claim, or like how many allowances do you claim? You all would claim 0. Because chances are you don't depend on your own income, right? So you wouldn't depend on yourself to provide for yourself at this point because you're still in high school. However, your parent, you depend on your parents' income at this point. So your parents will claim you as a dependent, and whatever other people are in the household. Could be siblings, could just be people that are dependent upon that person. So like, if one parent works and the other parent doesn't, and you've got 3 kids, that would be 5 allowances. Because the person who works depends on their own income. The person who doesn't work depends on that person's income, and then all 3 kids depend on that person's income as well. Yeah, right. Yeah.
And they all have an income.
Yes.
They have one dependent.
Yeah, just themselves. Yep. So like for myself, my wife and I, we both work full time. So I claim 1, she claims 1. Because neither of us depends on each other's income for support. So we can claim ourselves. Yeah. So that's how that works. So find the income range from the table. The income range, what was the income range, by the way, that we were looking at? The income range are the first 2 numbers in the column. So what is the income in between for the gross income? Yeah, so it'd be the 420, whoops, not 40, $420 to $430 range. That's the range we're looking for. Find the column for 2 allowances, and then the amount withheld is $14. So do not lose this packet because there will be plenty of problems that you have to be working through throughout this entire chapter, by the way. So we will reference this packet multiple times throughout the chapter, so please hang on to this. I do have some extras. If you end up losing it and you need an extra, I'm happy to print another one out, but it'll be a lot easier if you don't lose it. So I'll also post it to Google Classroom as well. So if you do lose it, you can check it online. All right, let's turn the page. So I want you to answer problems number 1 and 2. Listen carefully though. Pay attention to the very top of the page, whether or not the person is married or single. That matters because they're completely different tables altogether, whether or not you're married or single. So take a couple minutes on that, figure out where those are in the table, write down the amount that is being deducted based on the allowances. Yeah. All right, so for Dan, how much is he having deducted in federal income tax every week? $18, okay. So if we go down between 390 and 400 on the married persons, so that would be page A4. If we look at between 390 and 400, we're looking at claiming 1 allowance. So here's 0, here's 1, $18. Good. So the answer for that first one is $18. How about Angie? What's her deduction? Was it 31? Okay. So 435. So she's single. So we're on page A2. She's single. She makes $435.95. So that's between 430 and 440. So we're looking down here at this line here between 430 and 440. She claims 2 allowances. So here's 0, 1, 2, $31. Nice. So federal income tax, she has $31 taken out every week in federal income tax. So 18 and 31. Any questions about where we're finding these values? There's no actual math that you're doing. You're just taking the values and looking and lining it up on the table. The next thing we're doing though, because there's 2 ways to calculate weekly deductions in federal income tax. The first method is the table method. The second method is called the percentage method. And that one actually does use some math. So make sure you have a calculator for this next one. So it says that some companies use a percentage method instead of the tax tables to compute the income tax withheld. With the percentage method, you use taxable wages to find the withholding amount. Taxable wages depend on the number of allowances you claim. Use figure 2.1 to find the amount withheld for a single employee paid weekly. Each weekly allowance is $63.46. So, in order to calculate the taxable wage, you first have to deduct the allowance amount. Once you deduct the allowance amount, then you find out the taxable wages on this table here, and then do the math that it tells you over to the right. So for example, let's look at this first example then. It'll be easier if we just use, we're going to use, by the way, anytime you have to use the percent method, you need to go back to this page right here in your notes. You will have problems on your assignment that will reference table 2.1. You have to go back here for that. So Lance, turn the page, here we go. Lance Hart's gross pay for this week is $393.23. That, however, is not his taxable wage. His taxable wage will be less than that. He's a carpenter's apprentice, he is single, and he claims 2 allowances. Using the percentage method of withholding, what amount will Lance's employer withhold from his pay for federal income tax? Okay. By the way, on here, the only percentage method we have is for single people. So I don't think you're going to see married people for the percent method, but you will see that for the table method. Both single and married for the table method, just single people for the percent method, unless there's another table in your notes, which I don't think there is. So the allowance amount is equal to the number of allowances multiplied by $63.46, because at the top of that table, it says each allowance is worth $63.46 deducted from the gross pay. So the allowance amount here, how many allowances does he have? Claims 2 allowances. All right, so the allowance amount is going to equal 2 times 63.46. So how much is he able to deduct from his gross income to get to his taxable wage? What are his allowances worth? Yeah, $126.92, which essentially means, according to the government, he makes $126.92 less than his gross pay, which is in his favor, because the less you make, the less you pay in taxes. And so deductions are in the benefit of the employee. The more you can deduct, the less taxable wages you have, which means the less taxes you end up paying at the end. So if you can deduct a lot and get your taxable wages down, then you don't have to have as much taken out in taxes. So this is a good thing to deduct amount from. It doesn't mean you're going to earn less. It means you have less taken out of your paycheck, which means you actually earn more. So the taxable wage is going to equal the gross pay, $393.23, minus the allowance amount of $126.92. So what is his taxable wage? How much is he actually being taxed on? $266.31. So his gross pay is $393.23. However, he's only being taxed on $266.31 of that $393.23. So now that we have the taxable wage, we need to go back to the table and find the taxable wage in the row over 195, but not over 645, because his taxable wages are more than 195, but they're less than 645. They're 266.31. So if you take a look here, there are three different tiers of weekly taxable wages. So if his wages were between $51 and $195, this would be the amount of tax he pays over here. If he makes between $195 and $645, which is where we're at, there's an automatic $14.40 deducted plus 15% of the excess over $195. We'll talk about that in a second. If he makes between $645 and $1,482 a week, he has an automatic $81.90 deducted plus 25% of the excess over $645. And it keeps going, but we're not going to see values that get larger than that. Now, notice that this first tier starts at $51. What if you make less than $51 a week? Yeah, you don't get taxed. So if your income is low enough, you don't get taxed at all. You get to keep every cent. But $51 a week, that's a pretty small amount. These days, that's like, what, 3 to maybe 4 hours of work, which is not much. So yeah, if you make less than a certain amount of money, you don't get taxed at all. And that is true. But this is 2010 numbers. So this is where we're at. We are taking a look at $14.40 plus 15% of the excess over 195. I'm going to repeat that over here. So deduct 1440 plus 15% of the money. Oops, write this down. Plus 50% of the money over $195. So that's the math we're going to have to do to figure out how much money is going to get deducted from his paycheck in that week. So no matter what, $14.40 gets taken away from the $266.31. And 15% of all the money over 195 earned. So how much more money did he earn than $195? How much over is he beyond $195? Somebody figure that out and tell me what it is. How much over 195 is he? Yeah, $71.31, because it's the difference between $266.31 and $195. To get from $195 up to $266.31, you're going to subtract $195 from $266.31. So write this down. Money over $195 equals $266.31 minus $195, which equals $71.31. So the amount of money that he is over, his weekly taxable wage, the amount of money over 195 is $77.31, because that's how you get from 195 up to 266.31. So this is the amount that gets taxed at 15%. So 15% of 71.31 is equal to 0.15 times 71.31, which equals what? Rounded to the nearest cent. What would that amount be? $10.70. Good. So he gets $14.40 deducted plus 15% of the money over 71.31, which is 10.70. So in terms of the total amount withheld, it's those two together. So let's just say FIT equals FIT for federal income tax. Here's our answer. Federal income tax equals 1440 plus the 15% over 195. So it's 1440 plus 1070. So we're looking at $25.10. That's the answer. So this one requires math. Whereas the first one, you just have to find the number on a chart. Hey, I have an idea. Let's look at the chart and see how close this is to the table method. So his wages are $393.23. He is single. He claims 2 allowances. So between 390 and 400, let's take a look. Here's 390 to 400 right here. And 0 allowances, 1, 2, $25. And the percent method, $25.10. Almost the same, which makes sense. Because whether you're using the percent method or the table method, the amount deducted should be basically the same. So there we go. And by the way, this is a really good way to check your answer. If you get your answer here and you check it on the table and it's really close, you probably did it right. If it's, you know, a few dollars different, maybe something didn't go quite right. So that's a good way to double check your answer there. So let's try this next one. And then I'm going to have you do number 4 on your own. So number 3, here we go. All right, claiming 2 allowances. So we need allowable amount. So let's just say, yeah, allow amount. So AMT abbreviates amount. So the allowable amount is going to be the same as the last time, actually, because there's 2 allowances. So it'd be 2 times 63.46, which we know is 126.92. We calculated that in the previous problem. Which means that his taxable wage, so tax wage, is going to equal his gross pay minus the allowable amount. So 293.23 minus 126.92. So what is his taxable wage here? Anybody have that? I got more than that. 293.23 minus 126.92. Okay. Anybody else? What's the taxable wage here? How did you get? 166.31 is what I got. Yeah, 166.31. So that's the taxable wage. Now here's something that's I find actually really interesting, because if you look at his gross wages, 293.23, if you flip it over and you look at the table, 293.23 is in this second bracket between 195 and 645. However, because his allowances reduce his taxable wage to 166.31, that actually puts him in a lower tax bracket altogether, which means that's going to reduce the amount he has to pay even more. Because the higher up you go in tax brackets, the more you end up having to pay in taxes. And so if you can make enough deductions to actually get yourself down into a bracket below where you're at, that means you'll have to pay even fewer in taxes. And here, there is no set fee. There's a set fee of $14.40 for that second bracket, but the first bracket is just a straight 10% over $51 because there's no initial amount that you have to pay. So all we have to do is calculate 10% of his taxable wages over $51. So the amount of money over $51 is going to be equal to 166.31, his taxable wage, minus 51, which is $115.31. So he's only being taxed on 10% of this. So 10% of 115.31 is equal to 0.1 times 115.31. So his federal income tax for that week is what? How much is he getting taken out in federal income tax that week? Or sorry, sheet, Deb. 11.53. Yep. $11.53. And we can double check this on our table. It should be a number really close to 11.53. Maybe it's 12, maybe it's 11. It shouldn't be more than $1 off though. So if we go to between 293 and 300, or so between 290 and 300. So 290 and 300, we are claiming two allowances. There it is, 11. And here, 11.53. So it's basically within $0.50, which is great. That means we did it correctly. So I want you to try number 4 on your own. Try number 4 on your own. All right, who's got the allowable amount? Esteban, what's the allowable amount on number 4? Okay, how many allowances is he claiming? 4, okay. And then how much is each allowance worth? So we're not using the table right now. How much is each allowance worth? 63.46. Okay. So on your calculator, do you have one? Okay. Multiply 4 times 63.46. $253.84. Good. So the allowable amount is $253.84. All right. So Miguel, if the allowable amount is $253.84, how do we find the taxable wage? Okay, look at step 2 above. Taxable wage equals gross pay minus allowable amount. What was his gross pay? The gross pay is the amount earned. Okay, so $587.94. Subtract the allowable amount, which was what? The total allowable amount, because there were 4 allowances, is what? Right here. So 63.46 per allowance. There's 4 allowances. Total amount for allowances 253.84. So you have a calculator? Okay, let me just subtract those 2 numbers. Tell me what the taxable wage is. What is it? 334 point what? Yeah, $334.10. Good. So if his taxable wage is $334.10, which row do we need to reference on our percent method table? Jose, what row do we need to reference here? If his taxable wage is $334.10, row 1, 2, or 3? 2. Okay. So we are using row 2 to calculate the tax withheld, because 334.10 is in between 195 and 645. So no matter what, we're going to deduct $14.40, no matter what, plus 15% of the excess over 195. So we need to calculate the money over $195 here. That's the number we're going to use for that. So how much more than $195 did he earn? Jocelyn, how much more than $195 taxable wage does Mitch have? What was his taxable wage? This taxable wage is right here. That's how much money is being taxed on, 334.10, okay? So 334.10, and we're trying to figure out how much more that is over 195. So what do we do with the 195 after this? Yeah, subtract it. Okay, so minus 195. So, you have a calculator? Okay, type it in. 334.10 minus 195. Was it? 139.10. Yeah. So $139.10. That is the amount that he's going to be taxed at a percentage. Elijah, what percentage is he being taxed at for this amount of money? So his taxable wage was here. Look at the chart on the previous page. What row did we say we were using? So $334.10, is that row 1, 2, or 3? Row 2, okay. So what percent? 15, good. So we're using the 15% over 195. The amount over 195 was 139.10. So we're looking at 15% of 139.10. So we're multiplying 0.15, 15% times 139.10, which equals what? What is 15% of 139.10? Do you have a calculator, Elijah? Borrow one from Brandon. I know he's got one. Type in 0.15 times 139.1. Tell me what you get. Right here, 0.15 times 139.1. Okay, round it. What do you get if you round it to the nearest cent, nearest hundredth? $20 and how many cents? 87, yeah. The 5 after the 6 rounds the 6 up to a 7. Okay. Now, is the federal income tax withheld $20.87? Is that the answer? No, why not? What do we have to do with that? Well, there's no more subtraction here. We have to add the 1440 because this is 15% of 139.10, which is the amount over 195, but we're using row 2 of this table, and row 2 says 15% of the excess over 195 plus $14.40. So we have to include that 1440 and add that to the 2087. So federal income tax would be 1440 plus 2087, which is going to equal how much? 35.27. Good. $35.27. That is the federal income tax for the week for Mitch. Now, if we use the table to verify this, we should be within about $1 or so. So if we go to our table, Mitch is single, so this is page A2. He made $587.94, so you're going to go between $580 and $590. So there's our between 580 and 5. There we go. Between 580 and 590. We're talking about 4 allowances. So here's 0, 1, 2, 3, 4, which says 34. We had 35.27. That's within about $1. So we're good. You can double check it on the table just to make sure that you are reasonably close within $1 or so of that method. Now it looks to me, honestly, it looks to me like the percentage method is always deducting just a little bit more than the table method. But I feel like the percent method is also a little bit more exact, which means if it's taking out a little bit more here, chances are you're going to be able to get a little bit more back at the end of the year when you actually file your taxes. So that money is just not going away forever. You can reclaim that during tax season, which is next Monday. All right. Any questions on this process? There's quite a few steps, but they're all written out here. And you can reference the table here. If you get stuck on any of the problems from your assignment, let me know. All right. That was it. Cool. We're done.